Hello traders, I am making this video just for you to see a need to be very patient with your trade tomorrow. So first and foremost, tomorrow is Friday, April 26th, and we can see a lot of highly impactful news for JPY as well as the USD. If you guys notice, I've been selling um, JPY pairs and I've been showing you the results, but right now I am, secured and trailing profit on JPY pairs because of these volatile news that are coming in tomorrow. All right. I mean, these news that are coming tomorrow that they are likely actually to, shake the market and shake the JPY pairs. Basically, if you all notice, the JPY pairs have been deteriorating for a while and you see all other peers against the JPY actually buying. So we are likely to see some volatility in the market tomorrow, and we need to be very careful. So my advice to anyone will probably be to either take partial profit or close your entire trade just before this news, tomorrow. The first news, all these JPY news are tentative, right? So they are not really the time, for this news have not really been determined. So they are likely to happen. So be very careful. I'm looking forward to some level of intervention news that will come out and maybe change the fortune of the JPY, as a pair. We're talking about the Japanese yen here. The second one is that we have two very highly impactful news on the USD tomorrow, and this will definitely have some kind of effect on the USD, the US index, as well as gold for those that love to, trade gold like myself. I'm also expecting to see some level of volatility um, in, USD, Euro USD and GBP USD because they are directly correlated in an inverse way. So sorry, they're inversely correlated with the UX index. So if the US index will go up tomorrow, we definitely will see some, bearish move and vice versa. So let's quickly go straight to the chart. I'm going to start to analyze, gold and show you a reason why you need to be careful, when you're trading gold. Right now, the first thing I can see on the gold chart is to see that the gold is, kind of bearish for now. If you look at this bullish order block that led to this spike that we saw right here, right? uh, could not hold price after we saw this particular rejection. So this, for those of you that have been listening to my lectures on smart money concepts, you will realize that this right here is one of the most powerful tools, all right, among all the institutional reference points that we use, and this is called the mitigation block. I'll explain to you why it is a mitigation block in a bit. Mitigation block. This is a mitigation block. Now, and if you look at it very, very closely, price has not traded back into that mitigation block, after it got, mitigated. And after we see this bullish and close below that mitigation block. So let me mark this mitigation block with a red or purple color just to uh distinguish it from my bearish order block, as I will always mark my bearish order block um red. So that is a mitigation block. Now, it is not a breaker block, but like I told you guys, the difference rather between a mitigation block, let me just come back here and explain it again. So let us assume that, price is going upward, right? And it's going like this, and it's going like this, and then all of a sudden you see something like this, and then price comes close below here, and later use this particular point as a reference point to sell. The reason why that happened is that in the course of price coming down, there was a uh, you know bullish order block, right? That would have held price right here, but could not succeed in holding price. However, that point that could not succeed in holding price, you know, uh, would not take out a previous high that was created right here. All right. So because this previous high that was created did not, was not taken out, you know, then it becomes a mitigation block. And this other block that was supposed to have held price that did not hold price, right, as a bullish order block now becomes a bearish mitigation block. And as you can see, price now to use that mitigation block as entry for the bearish continuation. Now, this is where a lot of people get things wrong when it comes to the difference between a mitigation block and a breaker block. A breaker block is quite similar, but let me just clone this so I don't have to keep changing. So now look at this, all right? It's still the same chart, all right? But look at the difference will just be that when you look at this chart, this same order, bullish order block that was here that turned a mitigation block, right, is different from this other one in the sense that, this actually went and broke this horizontal zone before coming down. So the difference simply between a mitigation block and a mitigation block and a breaker block is simply that, a breaker block would always take out the previous high before turning a bullish order block into a breaker block. Whilst a mitigation block will not take out the previous high. It's that simple. So to that extent, let us see what gold is likely to do. So guys, I'm going to be taking out these markings right here because I need this space right here in my analysis of gold. All right. So guys, I'm just trying to show you what we're likely to see tomorrow. Right now, this is a breaker block, sorry, a mitigation block right here because this was a this was actually the previous high. Like I was trying to demonstrate before, this was actually the previous high, but this high that got here could not take out this high. So before coming down, and after this rejection that we saw right here at around, I think 2417 area, then it was followed by a very strong bearish move that actually, closed below this, order block that led to this high that was here, which was rejected at 2417. So for me, this is going to be a very good zone to be looking out for a buy. Anywhere from, sorry, for a sell, pardon me, anywhere from this point, right, to this point right here will be a zone to look out for. So guys, I'm looking out for gold, right, to at least come back to this area in the long run, right, before actually continue the downtrend. So except you are already in a sell, that you started from anywhere around here, which is secure, I would advise that you close or take partial profit or secure any trade that you're currently in on the bearish side, you know, so that we can take advantage of whatever happens, you know. But don't forget, guys, trading is just a game of probability, and we trade high probability. So it could also be that price will just come, then continue downward. But I believe very strongly that, you know, there has to be some level of retracement, and where that retracement is likely to get to on the bullish side is the area I've shown you, that in that purple area. All right. So please be careful. I don't think any uh, trader that has been learning from Facebook should get trapped, you know, with the knowledge we already have. So I'll be looking at that purple zone rather for a possible, you know, bearish entry for continuation. So I'm going to remove this because I need you to see something right here. Now, this is right here also is there are two good institutional reference points apart from mitigation block, right? That price might also want to flex with tomorrow. And the first one I will tell you in order of priority is actually here, where we have a fair value gap. And as you can see, the middle of the fair value gap is already looking at like a confluence, right, between the bottom of is already confluencing rather. Let me just put it that way. If you, I'm sure you guys understand what I mean. With the back of the mitigation block, that is the purple zone, right? If you draw it correctly, you will see, okay, yeah, you will see that that area. So meaning that 2353 will also be a point that price will get to, but a more conservative area for you to enter a sell trade will be here. And then we expect price to start to fall. All right. So I would expect you to be patient, right? It's better for price not to get to your entry and leave you to go. You can always come back around here to look for a break of this particular zone here, right? So once you see price close below this zone, this support. So I'm going to mark this support green as usual, all right? So immediately you see price close below this area, then you can always look for entry opportunity. But when you see price come back into this other block right here, and then you can follow price down. So where are the zones I'm going to look out for tomorrow to sell to if I see an opportunity to sell from here? I'm going to be looking at this particular point here, and I'm also going to be looking at anywhere in this particular zone, right? Anywhere up until here, which is between, you know, this area. I would drag it to this point because of, you know, this relative equal low, right? So I expect this relative equal low to be taken out. So I'm going to be looking at this entire area as my first point of reference for take profits. That's if I get an entry. The point I'm actually trying to make here is that I am not going to add to my position because I am seeing, you know, this, all right? And this area, this green zone, right, will be my first point, you know, anywhere, even from the middle, because I need this low to be taken out, you know, so I'm going to start looking for taking partial profit from 2287 area, all right, because I'm looking at this area up until the bottom of this particular order block that we are seeing just right here. This is a bullish order block. All right. So my first take will be that price will come to this. But guys, look at something again, right? We might be expecting price to get to this point first, and then price, you just wake up in the morning tomorrow, and the first thing you will see is that price will come and mitigate this zone first, then come back here, then come down. Fantastic. These are just possibilities. All right. The second reference point that I'm seeing above, the current market price is this other block that is sitting just right here, right? This is a bearish order block. So price might actually also get to that bearish order block tomorrow before coming down. All right. And, because of the very impactful news that we have tomorrow, anything can happen. So my point is, it is either you wait for price to break this zone. I am actually going for bearish tomorrow. The only thing is, I do not know exactly where, but a very conservative area to actually take your trade from is to actually take your trade from, probably the middle of this, um, you know, um, order block, which is around here, the middle of this daily order block, right? Bearish order block. Let me mark it, red as usual for you to know the area I'm talking about, or the consequent encroachment area of the fair value gap, which actually is confluencing with the breaker block. So for me, I would need to watch out for price action, right? Before actually, um, you know, following it. However, if price continues to go down, I will close another position and leave the high position that I took. I took a position from around 4 to 4 to 9, right? So I'm going to leave only that position to continue to run while I wait for what price is going to do, guys. So these are the things that I'm seeing tomorrow. So for me, if you really want to um enjoy this the bearish move, because definitely there's a bearish confirmation, this very strong candle that closed below this order block uh that now became a bearish breaker block. So I am expecting a retest of anywhere from this zone to the top of the breaker block, which is around 2398, or another a retest of the 2400 zone tomorrow before we see the bearish continuation. Another possibility is for price to test the back of this point. Another possibility is for price to go test the top of the daily bearish order block before coming down. But by and large, all I see is a sell. But the question is, what do you wait for? Right? You need to exercise patience until all the news are out tomorrow. I wouldn't expect anyone to jump into any sell trade. If you got an entry above 2410, I will advise that you just secure and take partial profit and wait to see what price is likely to do tomorrow. So I'm just going to leave this at the daily analysis. I'm not going to do the top-down analysis, but just showing you those areas that you need to be very careful about if you are trading gold tomorrow. Have a blessed, night rest, and be careful with your trade tomorrow. Good night. Bye.